All right, I keep getting questions about my MSTE position and am I worried about a reverse split? I have a large position right here. I get about $7,000 a month from it. I got 46,000 shares. So for reverse split, I'd only have 33,000 shares. I'm going to answer that question today. And before we start, disclaimer on screen, I am not a financial advisor. Don't listen to a word I say. Do your own due diligence because remember, this is not financial advice. I'm just a guy on YouTube. Do not listen to me. And we're back. Okay, let's explain what a reverse split is because I think there's some confusion. The comments I get is, aren't you worried about losing all your money and losing your shares? So it actually doesn't do anything to my invested amount. I still have this amount invested. Everything's the exact same. Think of it like this. You got 2 shares, 50 cents each. Reverse split happens. You got 1 share, $1. Everything's the exact same. So it's more of an optics thing. When a fund loses share value in order to meet listing requirements, a reverse split is often required by accounting to make sure that they're still eligible to be listed on that exchange. That's it. So it's done from the accounting side to make sure the fund stays intact. But in reality, it's more or less optics. So it does cause retail investors to panic because they go, what's going on? I just lost half my shares. You lost nothing. It looks bad. And it's also bad because obviously it's an indicator that the fund is underperforming. MSTE went from $18 down to $3.50. That's huge underperformance. It even got down to $2.60 at one point. So I'm not saying it's great, but I'm going to explain to you why it doesn't really stress me out that much about reverse splits don't really bother me that much. And a lot of it comes down to just what I know about Bitcoin, what I know about MSTR, my conviction in it. And it also comes down to why I don't think newer investors should even go anywhere near this ETF. And by newer, I mean, if you haven't built up a solid foundation for your portfolio, if you've been investing for under 5 years, or let's say, even if you have all of that, you haven't put in like 24 hours of dedicated research into Bitcoin, another 24 hours into MSTR, and understood the inner workings of how both things operate, and then you invest. If you haven't done all of that, I would probably stay away from something like MSTE because it's just the most volatile way to get involved in anything Bitcoin correlated. MSTR is already a volatile way. Then you put a covered call leverage version on top of it. You're just asking for a headache if you don't understand what's going on. But what is going on? Let's talk about that. So here's why I don't care. Because I'm personally, my average share price is $7.94. I'm personally, because I have so many shares, wanting the price to drop. Let's share another screen here and I'll show you why. Let's open up this. Give me half a second here. Yeah. So here is the MSTE price. Here's where I bought in. Here's how low it got. And I have all those shares. And here's how high it got. Realistically, don't think it's ever going to get this high again, at least for another 3 years. I just don't see how it could happen. There's too many things stopping it. But when I originally bought in, I did think a fair value price of MSTE was between $9 to $11. Still think that nothing's changed. I actually still think it's fair valued around $9 to $11. Anything below that, I think is cheap. Anything above that, I think is overpriced. Personally, that's what I feel. But what I did, I underestimated how low I thought Bitcoin could go. I thought the lowest it would go is about here, about $5. It ended up going down to $2.60. So I was way off even after doing my research. So when I bought in at $11 originally, I thought it'd get down to $5. It just kept going. But since it went going, I did more research. I understood that Bitcoin tends to follow something called a 4-year cycle. A lot of people think that's dead. I think there's a lot of validity to that. I still think it's intact personally to some degree. So I still think a bottom either occurred in February, which could have happened, where you see this little wick down here. That was February, we got down to 260. But my personal opinion thinks a bottom will occur in May, August, or October, like every other 4-year cycle, right? So I'm waiting to buy back in to MST a little bit in May, in August, or October. Whenever you see a giant drop like this, if that happens again, I know the bottom's in, I'll buy in. But why am I buying in during the crash? Only because I have conviction in this. This is less of a covered call ETF for me and more of a value stock. I believe in MSTR. I like the thesis behind Bitcoin. So that is why I'm investing in it. I also understand this could take forever. For Bitcoin for MSTR to get to where they're trying to go, there's a lot of education, there's a lot of stuff that needs to happen. So the price could just get stuck at a certain price where I see no benefit from it. So I like the idea of having a covered call option on it, so I can at least get paid distributions, get those distributions, and have that close the gap on anything I lost, or continue to provide profits while I wait. Because this could take forever to get back up to $11. It could take 2 years. But while I collect distributions, I'm at a profit by the time it crosses $7. Realistically, I'll be at a profit by the time it crosses like $6 or $6.50 because I've been collecting distributions for so long. So it just makes more sense as far as de-risking myself, holding the covered call ETF. Oh, a lot of people say caps your upside. But, for me, the covered call element de-risks in that way because I get that buffer. But then kind of adds risk again because then I've added another fund, another layer of risk of now I have Harvest there to be like, hopefully they manage this properly. So I de-risk and add a little risk. I think it was worth it. So that's why I did it this way. So that's that. But I don't think newer investors should invest in it just because it'll still swing up and down. You'll constantly see yourself lose 20%, gain 20%, lose 30%, gain 25%, up and down, up and down, up and down. And that could go for months and that could go for years. And do you really want that, right? I don't mind it because when it goes down, I get some more. When it goes up, I stop paying attention. When it goes down, I get some more. When it goes up, I stop paying attention. I'm looking for the red. I legitimately made a YouTube channel where all I do is, I'll put it in here. 1 second. All I do is talk about strategy, Bitcoin every Friday. I kind of give my predictions of where I think the market's going to go, when I'm going to buy in, all that stuff. So obviously, clearly, I'm hyper bullish on this, but I couldn't ever recommend it to a newer investor because I just see everybody panicking, having nervous breakdowns and all that. Whereas when I see it drop down to 250, I get excited. I see a buying opportunity. I completely understand a reverse split might have to happen. Cool, do that. Makes no difference to me because I'm confident that Harvest will keep the fund intact long enough to see it start recovering. And when it starts recovering, everyone will forget about the fact that there's ever any risk of it closing down in general. So I'm just looking for it and hoping for it to keep dropping. I want to drop as low as possible so I can get the cheapest amount of shares so I can keep reducing this average cost. And I have no problem eventually putting in quite a bit, a substantial amount, as long as it keeps dropping in price. And then as soon as it starts going up in price, I'll forget I own it until it hits that entry point of $9 to $11 fair value again. And then when it hits fair value, I will de-risk. I'll start taking out my initial investment a little bit, right? Just to reduce that risk. And that'll be that. And I'll always just have a bit of this Gary Gill Bitcoin position. I call it Gary Gill Bitcoin now, not MSTE. But at the same time, I'm saying all this, but I'm building a Gary Gill's retirement portfolio because I'm retiring in 2 years. This is not sustainable income. Even at 15 cents, they've got to drop their distribution, in my opinion. If it stays around this $3 to $4 range, how do they maintain 15 cents? It's got to drop to 10 cents. It's got to drop to 5 cents, in my personal opinion, to preserve as much of that NAV as humanly possible, which I'm okay with because I'm just trying to accumulate and watch the price go up because this is more of a value investment than a covered call investment in the end for me. But I need a portfolio that I think I can actually retire off of, where the distributions can actually be used, where I'm not worried about it dropping 20% every day and then bouncing up 50%. I need stability. So that's why I started building out real positions, real covered call positions, not highly speculative value investments. Because that's what MSTE is for me. It's essentially MSTR, covered call buffer, to help reduce the risk for me a little bit. HYLD, Shift QDay. For my Canadian listed companies, I just have these now, my non-reg and my TFSA. That's giving me income that I'm not worried about. This will be stable. If the market crashes, I can still get my $1,000 from HYLD every month. If the market crashes, I can still get my $1,000 from QDay, right? If the market crashes, I still get my $100-something from T-SPY, my RRSP, my US listed one. SBG, if I want good Bitcoin, I want gold exposure, I just use ISBG now because it has spot Bitcoin, spot gold exposure. I have normal ways of investing. That will now be my foundational part of my income portfolio. So I'm still trying to do this responsibly. I still have a ton of cash just sitting there for my income portfolio that I'll deploy during market crashes to just get more HYLD, get more HDIF. I'll just keep doing that. I'm still doing the most conservative way of investing. Ton of cash for emergencies, or to buy the S&P or Canada when they crash, right? Buy on corrections, keep building up these core fundamental positions. But then I got this one crazy position right here, Gary Gill Bitcoin, MSTE, which is my value investment for the year. It's the one I think that is the most devalued, that has the potential for the highest return, but is also the highest risk, the most volatile. And I would never tell my mom to hold. MSTE. And that's the litmus test. But I would, because I've done a ton of research. I've interviewed people from strategy. I have a whole second channel called Gary Gill Bitcoin where I just talk about Bitcoin. The amount of research I've done is sickening. So when you see people like Patrick from Apex Wealth and he's bullish on it, you'll see Adriano, he's bullish on it. They're only bullish on it is because they did just hundreds and hundreds of hours of research. I'm telling you, like legitimately hundreds of hours. They probably spent just like up all night researching this stuff, and they came to the conclusion that yes, they're bullish on this. They believe in this. They think that this will 2x, 3x. But at the same time, if you were to do that same research, you could come out going, this is dumb. Why did I spend any money? So before you spend money on an MSTE, put in a ton of research and figure out if you like it or don't like it, because that will dictate how well you handle the volatility. That will dictate that when you see red, will you get excited because it's a buying opportunity because you know it's going to go back up in 2027, right? So get it, buy it while it's low, sell it while it's high, or get higher distributions when it's high. If you don't have that feeling and you're just panicking while it goes down, you don't know enough, or you do know enough and you're like, damn it, I found out too late, and you're just waiting to get out of the position. But before you buy in, if you're someone who hasn't bought in, you're seeing the low prices, please do the research. And if you've only been investing for 5 years, you haven't built up the large positions in these core fundamental ETFs, whether it's a VOO or a VFV or an HYLD, whatever it is, the core fundamental, stay away from stuff like this. Just stay away. It doesn't matter if it's MST, doesn't matter what it is. Just stay away from anything. Have a foundation, then go into the higher risk, more speculative investments, right? Do it in order. You're watching me do it in order publicly here, but offline, it's all in order. It's all just a bunch of VFV, VOO, all that kind of stuff. But now you can see it online of how I actually do it. I hold a ton of cash. I have $100,000 in HYLD. I have $35,000 in HDIP. I have 62,000 in QDay. I have 20,000 in CDay. I got T-SPY here for my USD investment, right? In my RSP, I got 10,000. I got some spot Bitcoin exposure and gold with ISBG 5,000. I'm building up these positions slowly, and these will all probably double by the end of 2026, right? I'm focusing on that, buying when the market dips because I still think the S&P is going to go down more this year, keeping cash aside for that. And I'm going to use my distributions here in MSTE because I am bullish on it still, even though I give a huge warning of don't do this, but I am bullish and I have every reason to be, and I truly believe in it enough. I started a second channel. I really do believe in the MSTR, stretch products, what they're trying to do, but I also understand highly volatile. It could take 5 to 10 years. This could be chaotic. It could be crazy, but every time it drops, I'm just going to get more. But that's where I'm at with it. So if you're not at it, if you're not there with it, if you don't see red and get excited, bad investment. Every time I see red with HYLD, I get excited and I buy more shares. Every time I see red with HDIP, I get excited and I buy more shares because I know what they do. I'm just getting the S&P 500 for cheaper because I know it's going to keep going up over time. I know, like with T-SPY, it's just the SP, it's just VO, it's just SPY, SPY, which is VOO essentially. I can get it cheaper if it's into red. I know VO is going to go up over time. Same thing with MSTR, MSTE. I personally, not as much obviously research as the SP 500, I personally feel MSTR will go up over time. I personally feel Bitcoin will go up over time. So when I see red, it's just me getting it cheaper. But I did a ton of research to get to that point. So don't invest into this crazy stuff if you haven't done the research, because you'll panic when it goes red. You will lose sleep. It'll mess up your day, all that stuff. For me, when I see red, I get excited. I actually have to restrain from buying too much. It's a completely different scenario. So that is my public service. So why did I make this video? I made this video because I had nothing to talk about today, and a lot of people have been asking me this question, and it's been like 4 days since I put out a new video. I'm a content creator. B, I've been getting this question a lot about reverse splits. Hopefully that clarified reverse splits. It's all context. Reverse splits are bad usually, but because I understand why the price is dropping of this fund and how it's correlated to Bitcoin, it's not necessarily that the underlying is anything wrong with it. MSTR is fine, in my opinion. MSTR is doing good. They're creating products that people want, like Stretch. We're good. I'm fine. There's nothing fundamentally wrong with the company. So I know it's just Bitcoin correlated, so the price will go down, but it has nothing to do with the company itself. It's okay. Reverse split happens. But if it was a company that's bleeding money, ill-managed, a garbage product, and it was really just heading towards bankruptcy, yeah, then I would be panicking. But it's a completely different bucket, right? So I'm not panicking. Context matters of why a company is dropping in price. I understand the context, right? And third is to make sure that you understand your risk tolerance and your stress tolerance. This is a high stress position if you don't know what you bought, right? these are low stress positions. Buy the low stress. The highest stress people should be going is like a Q day, which is heavy on tech because tech is dropping. But I love tech, so I bought $60,000 worth of it because I'm bullish on tech. This could be a whole nother video of me explaining why I think tech will continue to go up, why the AI bubble is, it's there, but it's not going to pop anytime soon. Stuff like that. Like this should probably be the highest level of risk most newer investors should take, is leaning into a thematic, more like tech concentrated kind of ETF. Stay away from crypto and Bitcoin if you just started investing. Get the fundamentals down first. Go into more of these Q-day type ETFs if you want to get more higher risk, higher yield. But if you talk about Q-Day, it's got a completely different fund structure. It's 80% underlying untouched. So they still have a conservative element to it, which is why I bought so much. Whole nother video. I'll make a video about it. But that's it. So invest responsibly. Please understand what you own. Context matters when there's a reverse split. I understand the context. That's why it doesn't worry me as much. And conviction matters. I think Bitcoin keeps going up. Sets a new all-time high in the next 3 years. MSTR keeps going up. Don't know if it sets an all-time high, but it'll be a lot higher than when I bought it. And thus, MSTE keeps going up. So for me, I see it as a discount, but I could never recommend it to you because I understand what it comes with. Tons of volatility and all of that wonderful stuff. Okay, all these positions here, I'll be breaking them one by one next week or later this week. I'll be doing my monthly portfolio update. I'll be buying some more stuff this week, so this number will probably be higher by the next time we talk. And I'll just go down through every position. So look out for that video. Leave your comments below. Please be respectful. If you disagree with MSTE, MSTR, be respectful. Just tell us why, but just be very respectful. People are more likely to listen to you and hear you if you talk in a respectful tone. And if you're someone who likes it a lot, be respectful to people who disagree with you, right? Let's not turn this into like Blossom, right? My YouTube channel. Let's be respectful. Let's, respect each other's opinions. Give your side of why you disagree, agree with whatever I said. And yeah, let's just chat in the comments below. Join Gary Gill Bitcoin. Go to GaryGillX.com if you want to see this portfolio. I update it almost every other day. Bye, guys.